Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. Kevin O'Leary Investment Principles. Welcome, investors, to our discussion on the investment principles of Kevin O'Leary. Known for his appearances on Shark Tank and as the Mr. Wonderful persona, Kevin O'Leary has become a household name in the world of investing. His principles and strategies have helped him become a successful entrepreneur, investor, and business expert. Today, we will be discussing the top 10 investment principles that he advocates for and how they can be applied to your own investment strategy. Whether you're a seasoned investor or just starting out, these principles can provide valuable insights and advice to help you achieve your financial goals. So, without further ado, let's dive in and explore the world of investing through the eyes of Kevin O'Leary. Kevin O'Leary Investment Principles. 10 Investments Principles from Kevin O'Leary. 1. Invest in what you know and understand. Kevin O'Leary emphasizes the importance of investing in industries and companies that you have a good understanding of. This can help you make more informed investment decisions and reduce the risk of investing in something you don't fully understand. 2. Don't invest in anything unless you've done your due diligence. Before making any investment, it is important to thoroughly research and analyze the investment opportunity. This includes looking at financial statements, studying the industry and competition, and understanding the management team and their track record. 3. Diversify your portfolio. Diversification is a key principle of investing, and Kevin O'Leary advises investors to spread their money across different types of investments, such as stocks, bonds, and real estate. This can help to minimize risk by spreading it across different assets and industries. 4. Focus on cash flow rather than appreciation. Kevin O'Leary suggests that investors should focus on the cash flow generated by their investments, rather than just the potential for appreciation. A company or investment that generates a steady cash flow can provide a more reliable return on investment. 5. Invest in companies with strong management teams. The management team of a company is crucial to its success, and Kevin O'Leary believes that investors should look for companies with a track record of strong management. This can help to ensure that the company will be well run and able to navigate any challenges it may face. 6. Look for undervalued opportunities. Kevin O'Leary suggests that investors should always be on the lookout for undervalued opportunities. This means looking for companies or assets that are trading at a price below their intrinsic value. By investing in undervalued opportunities, investors can potentially achieve higher returns. 7. Have a long-term investment horizon. Kevin O'Leary believes that investors should have a long-term perspective when it comes to investing. This means holding on to investments for the long term, rather than trying to make a quick profit. This can help to reduce volatility and increase the likelihood of achieving long-term gains. 8. Be prepared to cut your losses when an investment is not performing. Kevin O'Leary advises investors to be disciplined when it comes to cutting their losses. If an investment is not performing as expected, it may be best to sell it and move on, rather than holding on to it in the hope that it will recover. 9. Continuously educate yourself on the markets and industries in which you are investing. Kevin O'Leary emphasizes the importance of ongoing education when it comes to investing. This means staying up to date with the latest market trends and industry developments in order to make more informed investment decisions. 10. Have a clear exit strategy for every investment. Kevin O'Leary suggests that investors should have a clear exit strategy for every investment they make. This means knowing when and how to sell an investment in order to maximize returns and minimize losses. Conclusion. In conclusion, Kevin O'Leary investment principles offer a valuable framework for anyone looking to build a successful investment portfolio. By investing in what you know and understand, doing your due diligence, diversifying your portfolio, focusing on cash flow, investing in companies with strong management teams, looking for undervalued opportunities, having a long-term investment horizon, being prepared to cut your losses, continuously educating yourself, and having a clear exit strategy, investors can increase their chances of achieving long-term financial success. While no investment strategy is foolproof, following these principles can help to minimize risk and maximize returns. Remember, investing is a long-term game and the key is to be informed and disciplined in your approach. Thanks for watching. Don't forget to like, comment, and share.